Hello and welcome to COVID-19 90-Day Tax Postponements. This presentation was last updated 3/25/20. This is a very fast-moving topic, so later developments may not be included in this presentation after that date. I'd like to thank RIA Checkpoint for use of certain materials that are included in this presentation. Other materials are drawn from various IRS sources. How this comes together is my responsibility as the author. And remember, under Circular 230, these are educational materials and you should do your own research before advising clients. This presentation covers the postponement of some tax payments and tax returns due to the COVID-19 emergency. What are the possible responses to these two pronouncements? Well, the approaches on the following slides lay out three responses. One, which is ignore partially or fully the postponement options. The second is to postpone the return and any payments that are due. And the third is to file the return and just postpone the payments. Let's look at each of these approaches. In approach number one, we partially or completely ignore the postponement options. Why would we do that? Well, the taxpayer may not have a calendar year end, so no tax return or estimated payment was due on April 15, 2020, which is the key date in both pronouncements. Therefore, neither of these are eligible for any postponement. Or before anything was known about the postponement possibilities, the return or the extension of that return and or the first quarter estimate, if any, were already filed. That's too late. No refund. Or the taxpayer has a refund for the return due April 15th, and the return has to be filed to claim that refund. Well, we could file the return, but postpone the first quarter estimate, if any. Or we could file the return and get the refund and apply it to that first quarter estimate, as we would normally do in many cases. Let's try approach number two, the no return postponement option. The income tax returns due April 15, 2020 are postponed and filed no later than July 15, 2020. This should only be done for returns showing tax due. Tax due with the return is postponed, and any first quarter estimate payment can also be postponed. No extension request is needed to do this. If a further extension is desired, then an extension request could be made by July 15th and accompanied by the 2019 tax due. In other words, if we file this approach, tax return season has been moved to the summer. How about approach number three, the no payment postponement option? The income tax return due April 15, 2020 is filed normally, but payments are made no later than July 15, 2020. This again should only be done for returns showing tax due. Tax due with the return is postponed, and any first quarter estimated payment is also postponed. Again, no extension request is needed to do this. Again, if further extension is desired, that extension request has to be sent in by July 15th and accompanied by the 2019 tax due, along with any first quarter estimate that's been postponed. Now a few comments on each of these three approaches. In approach number one, we ignored all the postponement options. This may be the most common result for many practitioners, since most of the work had already been done and returns and payments had already been submitted by the time the postponements became available. Even if the postponements are available, it might be better for the client's peace of mind to simply get it over with. So a big question is, what about refunds? The IRS has assured taxpayers that refunds are being processed in the normal manner, and taxpayers should not be fearful about the government holding their money. So there does not seem to be any reason to delay filing returns claiming a refund. In approach number 2, we postpone the return. This approach is very helpful for taxpayers who are struggling to make ends meet during this crisis, and were already waiting until the last minute to file and pay. However, preparers may still have to do a pro forma return at least to make sure there is no refund due, and to determine the second quarter estimate, if any. For example, Bill is a single taxpayer, is self-employed, and underpaid 2019 estimates. A 2019 return has been prepared for Bill, but not filed yet, which shows a $20,000 tax due and a $13,000 first quarter estimate. The return and the payment can be postponed, but that gives rise to the question, how is Bill going to be any more able to pay in July? And now approach number 3, postpone just the payment and file the return. This approach is also very helpful for taxpayers who are struggling to make ends meet during the crisis and were already waiting until the last minute to file and pay. However, again, preparers may still have to do a pro forma return at least to make sure there's no refund due, and to determine the second quarter estimate, if any. So why not file the return? For example, Bill, our single taxpayer, is still self-employed and underpaid 2019 estimates. A 2019 return has again been prepared for Bill, which shows the $20,000 tax due and a $13,000 first quarter estimate. If desired, the payment can be postponed, but the return could be filed. But how again is Bill going to be any more able to pay in July? Now let's talk about the 90-day return postponement in more detail. The President announced the tax return postponement on March 20th, 2020, but the details were not known until March 21st, 2020, when the IRS issued Notice 2020-18. Notice 2020-18 superseded Notice 2020-17, which had been issued a couple days before, March 18th, 2020. We'll talk about the Notice 2020-17 in more detail in a little while. The 90-day tax return postponement is for federal income tax returns due April 15th, 2020. These payments are due from any person. Any taxpayer can be eligible for the postponement. The federal income tax return filing due date is automatically extended from April 15, 2020 to July 15, 2020. Taxpayers can also defer federal tax payments, including income tax payments and self-employment tax, that's due on April 15, 2020 to July 15, 2020 without penalties and interest, regardless of the amount owed. This postponement will be discussed in detail later. The postponement applies to all taxpayers, including individuals, trusts and estates, corporations, non-corporate tax filers like partnerships, and those who pay self-employment tax. No forms needed until July 15th. Taxpayers do not need to file any additional forms or call the IRS to qualify for this automatic federal tax filing and payment relief. Individual taxpayers who need additional time to file beyond July 15th use the normal Form 4868 to extend the return through October 15th. But of course, payment has to accompany that extension request. Other business taxpayers needing additional time file their extension request by July 15th on Form 7004, again accompanied by payment. What about state income tax returns? Many states have postponed either the return filing and/or the payment date. This is a fast-changing topic, so I suggest you consult your state tax authorities for further information. What about 2019 IRA contributions that are due by April 15, 2020? None of the pronouncements mention 2019 IRA contributions. Since such payments are not an income tax or self-employment tax payment, the contribution apparently still has to be made by April 15, 2020. Now let's integrate the return postponement notice with the payment postponement notice. The President announced the tax payment postponement on March 13, 2020, with the details coming out on March 18, 2020 in Notice 2020-17. The 90-day postponement is for federal income tax payments due April 15, 2020. Again, these payments are due from any person. Any taxpayer can be eligible for the postponement. So which taxpayers would that be? Well, these taxpayers have to be affected taxpayers to be eligible. But the President's emergency declaration instructed the Secretary of the Treasury to provide relief from tax deadlines to Americans who have been adversely affected by the COVID-19 emergency. The two notices simply assume all taxpayers are potentially affected by the emergency, so they do not create any special determinations of harm to the taxpayer. What payments are we talking about? Generally, any federal income tax payments due April 15, 2020, including calendar year C corporations with a return due April 15th. The tax due with the return or extension, in other words, plus the estimated tax payment due on that date. Individual returns due April 15th. The tax due with the return or extension on that date, including any self-employment tax, plus the estimated payment due on that date, including any self-employment tax. Trust or estates returns due April 15th. The tax due with the return or extension, plus the estimated payment due on that date. And then there's a remote possibility that an S corporation with a calendar year might have an estimated payment due April 15th because it has unrelated built-in gains tax under Section 1374. When are the postponed payments actually due? Although 90 days from April 15th is actually July 14th, the notices say the due date for the postponed returns and/or payments is July 15th, 2020. There is no interest or penalties due for the time the payments are postponed and the returns are postponed. What about other payments? Only payments due April 15th are postponed, not other payments, such as the June 15th, 2020 individual estimated payment. And payroll tax payments are not postponed, although they may be postponed under other provisions enacted by Congress very recently. Let's do a few examples. Filippi's single taxpayer return was going to be extended because of some delayed K-1s. On April 10, 2020, a Form 1040 extension would have been filed. Without the postponement, a payment of $5,000 would have accompanied the extension, and a first quarter estimated payment of $12,000 would have been made. Now, the return may or may not be filed, but no payment need be made either way, and the first quarter payment can be postponed. However, on June 15, 2020, a second quarter estimate of $12,000 is still due and payable. Then on July 15, 2020, payments of $5,000 and $12,000 are due, along with any postponed return or an extension of that return. However, there are some important exceptions to the 90-day payment postponement. There's no refunds. Income tax returns that already went in or extensions of those returns that already went in with a payment, there are no refunds. This could affect individual returns, S returns, C returns, and trust and estate returns. Now, interestingly, Notice 2020-17 put a $10 million limit on the C corporation payment postponement and a $1 million limit for other returns. Notice 2020-18, which supersedes Notice 2020-17 and drops these limitations. So there is no limit on the postponement amount. Again, some examples. On March 10, 2020, Graham's married filing separate return was filed along with a $2,000 payment. On April 10, 2020, a $3,000 estimated tax payment could have been sent. Grams cannot get a refund of the $2,000, but could, if desired, it's not mandatory, postpone the $3,000 estimated payment since that amount was due April 15th. Ribbon is a C corporation with a January 31st year end. Thus, its Form 1120 is due May 15, 2020, and its first quarter estimated payment is also due that day. Ribbon does not qualify for any income tax return or payment postponement. Bow is a C corporation with the calendar year end. Its Form 1120 is due April 15, 2020, with the tax due of $365,000. Its $11 million estimated payment is also due that day. It can postpone the $11,365,000 whether or not it postpones filing the return. Thank you for attending this presentation. This is Steve Dilley on behalf of Federal Tax Workshops.